As we set out our strategy today, we are really going to call out just how important China, India, and the United States are going to be for our growth ambitions. So let me deal with each of those quickly. China is basically fully back to normal. We're seeing very strong, sustained growth in China. India is recovering very quickly. In fact, the Indian government put out their budget today, and it is one that is definitely going to support economic recovery. And we're delighted to see no isolationism in that budget. So India is back on track, and the US remains strong. So those are the three key markets that are really going to drive about 50% of global economic growth over the next 10 years, and we're laser focused on them. Some of the other places, we're surprised how well Latin America is holding up. Likewise in Africa. Southeast Asia is a little bit depressed through the combination of lack of tourism and also the progression of COVID. So there's a quick world tour, but as I said, Unilever's focus at the moment is very much on China, India, and the US.
And just honing in on India, we are watching the speculation mount that India is getting close to herd immunity, certainly in parts of the country anyway, and it's a huge growth market for you, as you've just outlined. What's happening to consumer behavior there as the virus naturally starts to wane in the community? And do you think we can extrapolate what we're seeing in terms of behavioral change to other markets around the world?
So we're certainly seeing a step up in the mobility indices for India. So society and business is really getting back to normal. You'd need to speak to an epidemiologist, but our public health advice is that there's really no such thing as herd immunity without vaccination. And so we will be encouraging our employees to be part of national vaccination plans. But definitely the underlying health of the Indian economy is recovering, and we're certainly seeing that in our business.
And help us understand what we can expect for 2021, what you're going to be guiding investors as you speak to them today.
So we have restored our multi-year financial guidance today. And in that, we talk about growing our top line, underlying sales growth of 3 to 5% a year, improving profit faster than sales, and continuing to deliver very strong cash flow. For 2021, and I want to stress what I just said is multi-year guidance. For 2021, we still see tremendous unpredictability. And so our focus at the moment is responding to the very rapidly changing environment that we're seeing country by country. And we think that our sustainable business model, our strength in these growth markets of the future, and the wonderful Unilever team positions as well for that volatility. But you can probably tell from my tone some cautious optimism for 21.
And in terms of portfolio strategy, I mean, you talk about this being a multi-year strategy, and in terms of that long-term thinking, how does corporate activity fit in here? How are you thinking about M&A moving forward?
We're looking for the future strategy of Unilever. We're looking at places, categories where there is global scale, categories which are sensitive to the marketing and the technology that Unilever can bring, categories with good future growth prospects, particularly in these growth markets of the future. And today we are calling out 5 which are going to be a particular priority. The first is hygiene, both hand hygiene, but also surface hygiene in the home. The second is an evergreen priority for us, which is skincare. The third is continuing the success that we've had in building a prestige beauty business. The fourth is functional foods against a backdrop of increasing consumer concerns on well-being. And the final area, of course, is plant-based foods, where we see this secular trend towards more plant-based eating. 70% plus of our capital that we've spent on M&A over the last 5 years has been in those areas. And I think you can expect to see a further concentration of our spending against those called out priorities.